Well, let's talk markets. All the major averages are on pace for a negative month with 2 days left. Joining us now, Matt Powers, founder of Powers Advisory Group. And Matt, you're not unique in saying that we are witnessing maybe a little bit of a change in the markets from what we've seen in the past couple of years. And my question to you would be, since we're so close to all-time highs, I mean, we haven't seen it reflected yet. So are you seeing things in the dynamics, the internals of the market that tell you there's been a change, or are you just forecasting that there's going to be a change? Like you think from growth to value. Is it already happening, or you're expecting it to happen?
Yes, it's a good question. First of all, thanks for having me on. Love the show, guys. Thank you all for having me on. So, we see a clear change in narrative and theme with a shift from growth to value, to dividend growth investing in other areas that have been out of favor for a couple of years. It's kind of a challenge to find opportunities, and I think any investor is going to say that right now. But stretch evaluations come into play here. There's obviously uncertainty around Trump's policies, and then sticky inflation and rates higher for longer. But the short of it, we think boring areas of the market are back in favor. So as far as forecasting, wouldn't say that we're necessarily forecasting, but it's happening. We're seeing it. We're seeing the rotation and broadening.
The coverage of the markets, though, you would think we're down a lot more than we are right now. I mean, every day I hear the word of the day is chaos. Every day, everybody's got the same word of the day, and it's where's it can still happen, and I've heard people that obviously that are hoping for a fail. They pretend they already know that we're heading into a recession or into a big break in the market, and it's possible, but it hasn't happened yet.
Yeah. Taking a step back is, you can look at this sectors like financials, staples, healthcare. They're leading. Tech's lagging, and I mean we all know that. In 2025, it just looks a lot different than what we've seen the past couple of years. Like I mentioned, there's kind of a quiet shift from growth to value, and it's just a trend we expect is going to continue. And markets historically cycle. This is no different. Almost all Mag 7 names, I just saw this. They're roughly, almost all of them minus Meta, are double digits off their year high. We haven't seen that for a while. So, with that, earnings have actually been strong. 75% of right around there of the S&P 500 names beat Q4 estimates. But here's the main point. So broad index returns might be kind of disappointing as the Mag 7 and companies along those lines underperform, even if other sectors do well because of concentration at the top. So if you're focusing on overall index returns and not looking at specific sectors and companies, you might be disappointed in the results this year. Here's a great point. So the S&P 500 equal weight index is keeping pace with the cap weighted S&P 500. It's a major shift from what we saw last year by this point, where at this point we had the S&P outperform the equal weight 5 times over. So let's just not forget here. The Mag 7 is still 30% of the S&P 500. It's the highest concentration in history. So I think that's the issue we're seeing.
Well, that would almost seem like it. I'd rather have them matching each other than one outperforming that much, because doesn't that imply 100%. that the soldiers are moving instead of the general? So you're not there will be choppiness this year. Valuations are high. That doesn't necessarily mean we get a break, a 10%, 15% break. But valuations are. Do you think we get? You think there will be a period in 2025 that shakes our bull market thesis? Do you think we have a 10 or 15% pullback at some point?
Absolutely, I think we do. And if you look at going back to that, the broad base index. So you could be an investor inside having a fund inside your 401k, and you're plugging along. You're in an index fund, and you've had a couple nice years here. And even with other sectors that might be doing really well, if the Mag 7 or that mega cap area doesn't do well because it's just such a huge part of the market, I mean, you're going to see your funds down. You're going to see your broad-based invest. So we look at it. You've got to be a little specific this year with your investment choices, and it's just not as easy as placing money in a fund and having a handful of companies do all the heavy lifting.